Welcome back. Today we're talking again with Brigitte Baumann, who is the founder of Go Beyond, an angel investor group. It's a global angel investor group, which is really cool. They've got offices in North America, Europe, I believe also, as well as Asia, Middle East, and Africa. Correct me if I'm wrong there, Brigitte. And when we were speaking, you were mentioning that one of the interesting areas that you're focused on is, of course, young people and bringing that next generation of young person into the angel or the investing type of mindset. And as we look around the world in the financial industry, financial literacy is a significant problem and a recognized one, and financial organizations are doing their best to try and educate people more, even in simple money sense. But you're taking a step beyond that and bringing in the next generation of individuals who are looking at investing from the angel perspective, and you've developed an interesting program around that. So I wonder if you could tell us, to start with, a bit more about this program.
Yes, and indeed we do have individuals from the continents that you've described, which is really exciting. So the program is for young adults, so starting from age 17 to 33. And they join the program by themselves or their parents putting in a common pot of money, starting each person 10,000 euros. And so together they'll probably create a pool of money of, let's say, 1 million or more. And they can come with a parent if they'd like to. And what happens is that during the year, every month, they will get to see some entrepreneurs, and they will learn about how do you evaluate investments, how do you negotiate in investments, how do you actually make more than one investment, so you're building a portfolio. And once you do that, how do you decide which ones you will reinvest or not, how you will help those entrepreneurs grow, because the whole idea of being business angel is finance and also support, and how you will look to get liquidity so you have money that you can reinvest in other entrepreneurs or to use for something else. And the way that happens is virtually. So they first can look at the entrepreneurs on a platform and get to look at the documents that the entrepreneurs have put in, maybe a little video. And they get to have also a panel of 9 investors, both young and older, who are very experienced. I'm one of them, for example, and I have 15 years of experience. And they get to see also, for the same situations, how I and others who are quite experienced react. And then we have a discussion along why we might have different perspectives, because we think it's fantastic that the young generation can bring their perspective. And we will go through each of the sessions a bit of some of the concepts behind how do you evaluate a team, how do you negotiate terms, etc.
Now, when I sort of look at the rationale for doing this, I can see at least 2 interesting trends that provide a rationale. One is that the number of companies listed on American stock exchanges has roughly dropped in half in the last couple of decades. There used to be some 8,000, and I think there's some 4,000 or less now listed on American stock exchanges. So it appears that a lot of the focus on investing is not so much public stock exchange investing, but private equity. The other trend that I've really seen an uptake in the last few decades, of course, is entrepreneurship. And we're entering into a really interesting era of technological change, which requires creativity, innovation, adaptability. And this suggests that entrepreneurship itself is really on the rise. And I can see those as 2 underlying trends to what you're doing. And as well as the financial literacy problem that we mentioned earlier. I was just wondering, from your perspective, what are some of the reasons why you're doing this?
Well, most importantly is, why do the young adults, we've had really great success for the first program, and already starting to think about the second program, because within the first year, the group makes 8 investments, and then they'll be following those investments over a couple of years over the life of the entrepreneurs, but they will have already built their portfolio. And indeed, when we talk to them, and also because about half of them, it's the parents who are financing them for this program, they say, first of all, they realize that wealth management is going to look very, very different for the new generation than it was in the past, because like you said, there's a lot less very low risk, low return asset classes. More and more is in the higher risk, and more is in the non-quoted. The second thing is that many of these youngsters are thinking about going into entrepreneurship at a certain period of time, but this helps them learn a lot about entrepreneurship, because they get to see the life kind of 8 entrepreneurs in a short period of time. And often these entrepreneurs are in different countries, different sectors, different risk reward profiles. So if ever they're going to become, these young adults will become an entrepreneur, they'll already have a huge experience from these, in a way, live case studies. And the third one is that the young adults really, really do care about the world to come. And what's fascinating, because the second session they talk about an investment strategy. And many of them, they really want to, from the beginning, know that they're going to be helping, sure, maybe some new technologies, but they really want to understand how is that going to really help their generation. And they really do want to look at the teams that are being supported by investors. So what's fascinating is they sometimes put in much tougher criteria of sustainability than maybe older investors would bring. And so that means that there's a whole type of entrepreneurs that are getting more support quickly from the new generation than maybe traditional investors. So I think that's also a great way that they see that they can already have an impact when they're not yet in leadership positions, but they have some money, and they certainly have strong values that they want to support entrepreneurs with.
This, Brigitte, this really aligns with one of the concepts that we tend to be seeing in entrepreneurship, of starting with making a difference and then money will follow, as opposed to the other way around of looking where the money is and then trying to come up with a product or service. And there are, as you suggest, perhaps both on the investor side and on the entrepreneurship side, looking at making a difference in the coming world. What do you see as some of the areas in which these young people are interested in making a difference? Is it social? Is it the economy? Is it the interaction between people and technology? Where did you see their primary interest?
Well, first of all, what's great is they're not all equal, which is wonderful. So they had lots of discussions. I think the first one that was the easiest is certain sectors where they just did not want to get involved, and including there's some really interesting deals that they're looking at right now that could have military use, and maybe the first applications would be military, and they very much look for entrepreneurs, and they are finding entrepreneurs who say, I love the technology we're doing, but I really want the technology to first be used for good, and then maybe later on we'll talk about military. So that one was relatively easy, of certain sectors where they don't want to invest in. Then there was a lot about the environment, and that of saying, sure, we want comfort, we want all those things, but we really are looking for entrepreneurs who will really care about the total life of the product and the whole value chain, and so that it will be helping and at least not negative impact on the environment, and it will bring a certain level of uniformity on how each part of the value chain will benefit from the product, so that it's not creating a huge amount of profit in just one aspect of the value chain while draining another one. So I would say that that's the, after the environment, the third one was looking at, in a way, social, somewhere, fairness. It does not mean, though, none of them said, let's go for only social. They very much all agreed that, no, profit can be viewed as positive because that means self-sustainability and some measure of success, and also for them to be able to reinvest. But definitely they first had some other criteria before just looking at the profit potential.
I'm curious when you mentioned looking at the profit potential of what is the background of young people in terms of what you're seeing there? How business savvy are they? Do they understand the basic business concepts, or in your program are you having to provide that?
So two things. One of the things for learning about angel investing, we found two things: that they really like 20-minute bite size, and they like to learn as they're seeing the deals. So that's why each month is a new topic. But for example, if I'm going to, last month was company valuation, they very much appreciated that I could cover some of the concepts, but of the entrepreneurs pitching, we had already prepared that there would be some questions about valuation for those entrepreneurs. So that's the first thing, is learning while they're able to implement and see how it works right away. The second thing is that all of them say, please do not use any short, acronyms or symbols and things like that without explaining. So we're very, very conscious of making sure that whenever we use like a discount rate, not assume that someone knows what a discount rate, or POC, which is proof of concept, that we just don't say POC, but we really spell out the words. So that's something that they've asked us. At the same time, what's fascinating is half the time because they look at a lot of technology startup, half of the group does not necessarily understand that technology, but luckily they're so diverse. Some are engineers, some are more in IT, some have studied more social sciences. They each contribute to a perspective, because some of them will be looking at, hey, would I want to use this product? The other one's looking at, hey, how is this going to impact the world? Another one is, what do I think about this team? Another one will be more finances. Wait a minute, does this business model make sense? And then the last one could say, oh, wow, I really understand this technology. So they're so complementary. There's about 60 of them. What's fascinating is they really like that naturally they kind of focus on the aspects that they can judge, and they're always surprised on how they have an opinion, even though at the base they might not really fully understand what that entrepreneur will be, what that business will be doing.
I'd like to take what you're saying there and make a segue into some takeaways. And one of the takeaways that I'm getting from what you're saying is this learning when relevant idea, rather than learning a number of concepts when the person doing the learning is trying to figure out, well, is this relevant? It sounds as if you mix that actual learning by doing with learning with relevancy. And so as we get into a particular situation, we can see that this point and this point and this point is relevant, and therefore that provides the motivation for the learner to learn as we go. Is this learning when things are relevant approach?
Yeah, it's really fascinating because, for example, these, about, as I mentioned, half of them, the parents paid for the program, and we were really wondering how many would actually come to the monthly sessions. There's some additional ones, but there's kind of the base one is monthly, especially because we have, as I mentioned, we have some who come from Asia and all the way then the other extreme to Silicon Valley. So for some of them, it's Sunday morning at 8 a.m., whereas others, it's Sunday at kind of midnight. We have about 60 to 70% come. And what they say is because they really feel, wow, there's actually, $1 million to invest. and they really see that they're building something together. And for example, now we've done about 5-6 investments, or finishing 5-6 investments, and now when we talk about portfolio, they say, oh, you're right, there's another 6 we really like, but we only have money for another 2, or maybe we can squeeze money for another 3. How do we do it? So that's, instead of just me bringing up on how it's important to think diversity and portfolio building, they really see it. They say, oh, you're right, we don't have enough money to do all 10. We're going to have to make some choices. Therefore, how do you look at risk reward? And now they're re-looking at the deals that they were looking at on this reward, because there's a concrete thing, is they just don't have enough money to make all the investments, because they also know they have to keep some money to support those that will do particularly well. So yeah, we see it time and time again. They come because they really feel the relevance of what they're learning, and their money is in a pot.
That suggests for academia that courses around entrepreneurship, investment, and maybe even other kinds of subject matters should have this structure around it, so that the individuals who are learning things at the time in which it's relevant, and the motivation, the intrinsic motivation for learning is really high.
And that's why we've started being contacted, and we're going to explore for future ones to have collaborations, because I believe that indeed that is the future for all topics. And that's why it's so great that universities are partnering with practitioners on various topics, and that's how we can combine the learning but also the relevance. Absolutely.
Okay, very cool. Well, we've come to the end of our podcast, and I want to thank you, Brigitte, for joining us today and talking around really 2 interesting topics mixed together, that learning by relevancy, as well as having young people investing in private equity capital, and the methodology that you've developed. Very cool. Thank you very much for joining us.
You're welcome. It's been a real pleasure.
Thank you.